Everyone is asking the same question right now. Is Dubai real estate still a good investment, or are we already late? My name is Sara. I'm the founder and CEO of Royal Oasis Real Estate. Over a decade navigating this market, I've seen one of the most common mistakes investors make, which is prioritizing hype over the data. In this video, I'll explain Dubai real estate market in a simple and objective way. No hype, no fear, and no sales. My goal isn't to give you opinions, but to examine the core fundamentals. We're going to look at hardcore data, global benchmarks, and the microeconomic drivers currently attracting institutional capital and global wealth. By the end of this video, you'll understand why Dubai has transitioned into a primary global destination. When investors ask if the market is too late, they usually focus on the price chart alone. But smart investors don't analyze markets that way only. They look at fundamentals. They evaluate things like capital safety, currency stability, tax structure, economic strength, demand drivers, ROI and capital growth, market liquidity. They look at whether the city is fully developed or it still has room for expansion. So instead of guessing or following headlines, I'm going to walk you through the key fundamentals investors use to evaluate any market. Then you can decide for your own self whether Dubai is late, early, or simply misunderstood. Let's start with the first thing any investors looks at: tax environment. Dubai offers a tax-free property market, no income tax, no capital gain tax, no property tax, and no inheritance tax. When you compare this to almost every major global market where the taxes can eat up to 50% of your profits, Dubai wins without hesitation. In simple terms, your money works harder for you here. Once returns are clear, the next question is about protecting the capital. The UAE dirham is pegged to the dollar since 1997, providing long-term predictability. For international investors, this removes a massive risk factor, the foreign exchange volatility. And in uncertain global environment, currency stability is a competitive advantage and an edge. And Dubai offers that by design, not coincidence. But capital doesn't just move for returns. It moves where it can stay. Dubai doesn't just attract the capital, it retains it through the residency. An investment in Dubai is not just an asset allocation. It combines cash flow with global mobility. The 10-year golden visa renewable through real estate investment starting from 2 million dirhams, which is around $544,000, is a golden standard. And here's the key. You don't need to pay the full amount upfront. You can qualify for the visa by just paying the down payment and the registration fees, while the remaining amount can be paid through structured payment plans or even a mortgage. When you put this side by side with the world, the difference is clear. In the US, similar residency requires around $5 million and the capital being locked, while in Singapore the requirement approximately is about $7.7 million. And in Europe, programs can range from $2,070,000 all the way up to $2 million, often with non-yielding assets. If you compare that to Dubai offers capital efficiency and optionality. That's how you retain wealth. Now let's talk about the foundation, the economy. Dubai's economy is now almost entirely non-oil. Over 90% from the GDP comes from trade, tourism, finance, technology, and others. And the World Bank projected 4.8% GDP growth for the UAE in 2025. Which reinforces long-term confidence. This isn't a boom and bust cycle. It's a structural expansion. Economic growth only matters if people are moving in and the demand is real, rather than just acting as a money parking slot for the investors. Now let's look at the data. Dubai's population officially crossed the 4 million mark recently, with over 200,000 new residents this year alone. With this momentum, Dubai is firmly on track to reach the target of 5.8 million residents by 2040. This year, Dubai became the #1 destination globally for millionaires migration, hosting over 81,000 millionaire. Wealth migration creates sustainable demand, and real estate is always the first beneficiary. Beyond residents, there is tourism, and this isn't just a lifestyle. This is structural demand. If you understand the data well, you'll know what exactly is happening. In the first half of 2025, Dubai welcomed nearly 10 million international visitors and is expected to close the year with over 20 million tourists. What connects them is Dubai International Airport, Airport, which saw 48 million passengers only in the first half of 2025. That number is outperforming London Airport, Heathrow, and Paris. Dubai International Airport handles annually around 80 million passengers. This level of connectivity is one of the main reasons why Dubai attracts talent and business from every continent. All of this brings us to the market itself, and let's agree that liquidity is the heartbeat of any market. In the first half of 2025, Dubai recorded over 125,000 transactions, worth approximately 431 billion dirhams. This level of volume means you aren't stuck, you can rent, refinance, or even resell and have clean, efficient exits. With that being said, liquidity doesn't eliminate the risk, strategy does. So if you don't buy the right product, you can still get stuck even in a good market. Now, where does Dubai market sit in its own growth cycle? One of the biggest misconceptions in the market that we've reached the peak and it's all done. While it's true that Dubai is at all-time highs, you have to look at all of the fundamentals and the magnitude of the remaining upside. Currently, only about 30% of Dubai land is developed. That leaves around 70% of the city, nearly 2/3 of its future, still to be built. To put that in perspective, Dubai is already twice the size of London, yet we have less than half of their population. Cities like London and New York reached their peak after centuries of evolution. Dubai, our real estate growth has officially been truly in motion for the last 25 years only. Our freehold market only launched in 2002, making this a 23-year-old market only. So we aren't at the finish line. We're in the early stage of a global powerhouse. With the 2040 master plan, our blueprint, we aren't looking at a price rally. We're looking at a multi-decade expansion of infrastructure and capital appreciation. So how does this translate into income? Dubai offers yield between 6 to 12% compared to 2 to 4% in London and New York, and that's before tax. And when we talk about growth, Dubai is objectively the best performing city globally for the capital appreciation and the ROI. Now let's look at the momentum from the first half of 2025. This isn't just another good year. It was a historic record breaker. In the first half of 2025 alone, the total sales value in Dubai surged to over 431 billion in transactions value, with over 25% increase compared to the first half of 2024. This tells you that the liquidity in the market is at all-time highs. People aren't looking, they're committing capital at a pace we've never seen in the history of the UAE real estate. This is why the question isn't about whether the market is too high, it's about why the world's capital is flowing here faster than anywhere else in the world. Dubai is delivering both income and capital growth, not one or the other. So your money simply works harder here than any other global hub. And despite this performance, Dubai remains undervalued compared to its global peers. The average price per square foot in Dubai is below $500. In London is around $950. And in New York is around $1,850. With the same budget, you can acquire larger, higher quality asset in Dubai than anywhere else in the world. Finally, let's talk about optionality. Dubai caters to everyone, from entry level to institutional capital, with all type of payment plans, including the most friendly payment plan structures in the world. But a warning, a cheap price or a 1% monthly payment plan isn't always a good deal or the best buy. What actually matters is value for money and growth. Strong developers like Amar might have a slightly higher structure or even a price and an aggressive payment plan, but they offer better liquidity and cleaner exits. When you put all of that together, a clear picture forms. Dubai doesn't compete with traditional markets. It operates in a category of its own. Dubai real estate isn't hype, it's fundamentals. Those who understand the structure of the market create wealth, not just transactions. In a market full of hype, we choose to lead with evidence. This channel is about providing clear, objective insights, so if you're looking for the truth about Dubai real estate market, you're in the right place. And if you'd like to explore opportunities or look at the data I use for my own clients, click the link down below to connect with me. Thanks for watching, and I'll see you in the next video.